The crypto coaster is heading down once again after reaching dizzying heights. Assets like Bitcoin and Ether have dropped after the world's two largest economies put tougher cryptocurrency regulations in place. But analysts remain optimistic that blockchain bets can be long-term winners as the industry gains legitimacy and mainstream popularity. Paolo Montecillo has more.
U.S. President Joe Biden is met with applause as he signs a long-awaited infrastructure bill into law. The $550 billion package will fund upgrades of roads, bridges, and airports in the world's largest economy.
We can deliver real results for real people. We see in ways that really matter each and every day to each person out there.
One group, however, isn't as enthusiastic. The new law imposes tougher tax reporting rules on cryptocurrency transactions, including the disclosure of investors' personal information. Industry-leading token Bitcoin slumped 9%, while rival Ether fell 10%. They led a broad decline in the global crypto market, which lost $200 billion in value in 24 hours. Some analysts say there's still reason for optimism.
Investors have been craving for this legitimacy of that cryptocurrencies, and of course this gives them that, because now you are paying taxes on an asset which is believed to be completely legal now. So of course on the longer term time frame, this is a very, very positive news.
As Washington embraces blockchain assets across the Pacific, authorities are cracking down. Beijing is restricting the ability of state-owned companies to engage in cryptocurrency mining. China is the world's second-largest crypto miner after the US. But the computers that do the work use a lot of electricity, which is now in short supply in China.
If entities paying residential electricity prices are found to be involved in cryptocurrency mining, we may impose penalties on them. We will exert high pressure on these cryptocurrency miners.
Despite wild cryptocurrency swings in 2021, the size of the global market has surged more than five-fold over the past year. That puts pressure on policymakers to find ways to manage the risks so they can benefit from the gains. Paolo Montecillo, TRT World.
Let's go now to Jeffrey Tucker. He's the editorial director of the American Institute for Economic Research. He's also the president of the nonprofit, the Brownstone Institute. Thank you very much for being with us today. So the knee-jerk reaction from investors to the US's new tax rules for cryptocurrencies has been negative. But could regulation be beneficial to the asset in the long run?
Yeah, I've heard people say that. I don't really think so. However, we have to remember that people have expected these rules for years. I mean, the only way you're ever going to be able to control crypto at all is through the exchanges, because otherwise, once you're in the ecosystem, there's no chance for these kind of reporting requirements. I mean, your accounts are pseudonymous. You're working with private keys on an uncrackable ledger. And we know this. There's no kind of shutdown that can ever shut that down. So this is going to affect a very small number of crypto holdings. But it's going to be intimidating for them. I think it's going to probably hurt the exchanges a little bit on the margin. The other thing to remember is that these rules don't actually go into place for until 2023. And meanwhile, things in the U.S. right now are politically really in a transitional time. It's very likely that there'll be new bills that are coming out that'll restrict these restrictions themselves, and they may be removed entirely. Just because from an accounting point of view, these things are going to be very difficult to implement, very costly from the point of view of the exchanges. And, you know, the U.S. is also changing its attitude. U.S. authorities are changing its attitude towards crypto and mining and everything else because of the crackdowns in China. That's incentivized U.S. policymakers to be a little more liberally minded.
Right, Jeffrey, on this point, Chinese regulators are considering penalizing cryptocurrency miners, but the country is also one of the biggest markets for the practice. I mean, how can it balance the development of the cryptocurrency industry with environmental concerns?
Well, there's not, you could switch to a different kind of protocol, proof of stake instead of proof of work. But in the end, one of the reasons that crypto is succeeding is precisely because of the cost of its mining. And maybe that sounds a little counterintuitive, but something like a token that's free that's available to everybody without any cost is actually going to be low in value. So the very cost of the mining itself incentivizes the mining and thus the confirmation of the transactions, but it actually grants value to the crypto itself. And actually, it's generally good for the energy markets by providing a certain demand that otherwise wouldn't be there. Now, China complains about the shortage of energy, electricity, and they want to use it for other purposes, but that's not a problem in the U.S. And also Russia's now very much interested in getting involved in the market. The mining interests can also move very quickly from one country to the next. We saw that with the crackdown on mining in China. Suddenly, the U.S. became the top destination for miners. So they've learned how to migrate around to find the best location that's most tolerant. And since states compete with each other, there's always going to be a home for mining in this world somewhere.
Very quickly, as I'm running low on time, but the recent rally in crypto prices has come at a time of rising inflation. Has the asset class replaced gold as a go-to hedge against inflation?
Well, I just wrote about that this morning, so thank you. You see that gold is rallying right now, too. In fact, I did some calculations and saw once you do the inflation adjustment, gold is now, in inflation-adjusted terms, where it was in 1979, so it's performing quite well. I think both of them are safe haven assets. They both have their advantages and disadvantages. I think what cryptocurrency has done is given investors an alternative to precious metals. And I think that's a good thing.
Jeffrey Tucker, thank you very much for being with us today.